Let me start recording. Yeah, we're back. It's been a long while since I've seen you as well, P-Duck. That has been a good while. Seeing old faces again, that's good. That's really fun. Okay, so let's get started on this. Let me clear the chart real quick, and I want to go over two things. First of all, I want to go over what the market is doing right now, because I think what's happening right now is very predictable, and I think we can very easily take action on it. And after that, or before that, I want to go over the general market state for a bit. So I'm going to start the stream very zoomed out. We're not going to be this zoomed out in a bit. We're going to look at plays because we have a lot of actual plays coming up. I want to look at this for a bit. So one thing that I want to look at is this. Something that really stands out when you look on the left is usually when you have kind of, first of all, when you have closes like these that we've had in the past, this isn't good, right? No matter how you look at it, this isn't good. So when I look at the market on such a zoomed out state that we are right now, I'm not going to look at it from a bullish point of view. What I'm currently looking at is this. We have a lot of similarities with kind of this price action, right? With kind of having that massive drop, having consolidation upwards for no reason, which would be followed by a big drop again. What I want to emphasize is because I think this scenario is likely because we haven't retraced as deep as we have in previous cycles, where, for example, this one retraced to the 786. We currently haven't even come close to that. What I want to emphasize is I think this scenario is likely. I think we can get a lot lower market-wide. However, I also think that this cycle is going to be very different in a sense that we have a lot of coins that don't have much lower to drop, that are very close to a point where you can actually see, okay, if this coin drops any lower, it's going to be below its actual value. This will likely not happen. Something like for example, Link has some very real use cases, or for example, Aave. There's only a very select kind of alt that has this, because there are not a lot of alts that are useful. However, there are alts that are coming very close to a level where their actual value is there, where just buying it in general and getting exposure is actually worth it, even if VTC drops down. So, in general, I want to emphasize this market can absolutely go lower, and I think it is likely that we go lower. BTC can go about 50% lower before I would start actually saying this is where we bottom. We can also bottom here, right? That is not out of the question. We're seeing some very good price action, and my plays after this are mostly going to be longs. However, for a cycle bottom, I would only I would start looking at this area mostly. However, you cannot really time a bottom. It is really difficult to properly time a bottom. There are always going to be coins and tickers out there that are at very actionable levels where you want to be taking plays, where they are worth just taking a risk on. For example, I know I'm going to be taking a bit of a shitcoin, but that is the reasoning we have behind ENS, right? And for example, Aave is coming very close to a level where I would say it is worth taking a risk, where if it ever takes these wicks, I'm going to be back on spot on Aave. For example, AVAX is in a position where if it ever drops lower, you don't want it anymore. And this is a coin that is very popular, that is tradable a lot. So it is not likely that it actually goes significantly lower. However, you need to keep risk in check. And the reason I want to emphasize that is because drops like today are going to happen a lot more. And the only reason why it doesn't matter to us anymore is because we have relatively light exposure because of the market conditions. You cannot have fully sized exposure in these conditions. So if you're trading for yourself, you need to keep in mind that can happen. You need to keep in mind that the market can and likely will drop a lot lower, and you need to be prepared for it so you don't lose a lot. So if you get fucked on a lot of trades, it shouldn't hurt your portfolio all that much. Taking losses is not bad. Taking losses is part of the game, but you need to be able to learn from them, or you need to be able to at least keep trading. If you take too many losses and you have to lower your position size, that is going to hurt you in the long run. Okay, with that being said, I want to be looking at mostly the current BTC state. And the reason why I want to do that is because we are coming very close to some actually very actionable levels. As I have said before, I think the fact that we lost this low a while ago is very bearish in general. However, the reaction we're getting from this level is very good. We have a lot of reason for this bounce. Went over that a bunch of time in previous streams, especially with this harmonic giving us very easy technical targets. If we write up these targets, the reason why I'm saying that we are coming very close to some very actionable levels is mostly because of this. Let me actually, what's it called? Go to this one. Is because of this. When we draw our fibs like this, we can see that this technical target is still placed from last stream. I'll hide them real quick because we will get back to those. Yeah, let me just hide them. When we look at these levels, we are coming very close to that 382. The 382 is the first technical target of any harmonic, and this target is lining up almost perfectly with the bottom of this range. So the reason why I think we do have a bit higher in us, but not that much, is because we are going to have to be judging what this 382 is going to do. Currently, we are retesting a very important area. We broke out of this range, and we broke out of the area with this wick, and we are currently retesting it. This is very good. It is a very good sign that we are managing multiple closes above this level. And that is the reason why we're so comfortable with our positions. However, we have some way more important levels slightly higher. This is the main level I'm going to be looking at. And this is very much accompanied by, let's see, slightly different layouts across the different setups. Yeah, this is very much accompanied by this level slightly higher on total 1. These two levels are aligning very, very well. The bottom of this range combined with what's it called, this ABCD on total 1 is aligning very well. This is the level I'm mostly looking at for shorts. Currently, what we're seeing is mostly a reaction to news. Reactions to news, I'm going to keep it very short, but reactions to news, when they come out on Friday, especially during New York Open or during market close, so I wouldn't be surprised if we get more news this evening during the market close, are usually reversed. I go over that. I've gone over that in a lot of detail in previous streams, and I can link the streams if you want. But long story short, news that comes out during those moments where they have very low volatility, especially like kind of calculated news events that you have during set days, for example, a bill regarding the market's passing, has a very likely chance to be reversed once the market goes back open. It rarely goes in the direction people expect. So this is mostly what I'm looking at. When we zoom in very slightly on this chart, what we can see is that even though we had quite an aggressive drop today, in reality, all we managed to do was take the previous low. We didn't manage to do much more. We went lower, we got the drop, but the moment we took the low and the moment we took liquidity, we got bought back up and we closed above. This is a very good sign. I wouldn't classify this as an SFP because this is not really a swing low, but this is a very good sign because this is indicating to us that even though we have had very bearish news that caused a reaction, the bearish news is not actually a reason to drop several levels. The bearish news is just a reason to drop to support, which is completely fine. That is what support is for. The price action you see above between support and resistance is usually just noise. So seeing this, seeing it tap into that support and it close above is a very strong sign. It wouldn't surprise me if we go lower over the weekend and if we start looking at these lows. Or, for example, not during the weekend, but right before New York Open on Monday. Or just Monday in general, the market open. It wouldn't surprise me if any of that happens. However, in general, I think even if we do go lower first and we do go for these lows like this, I think this is a very likely target. All of these highs that we have up here are completely intact. None of the highs that were there before the news event were taken. So that means that every single person that looked at the news and took a short is going to have their stop somewhere above these highs. That is something that people very commonly do. So these highs are going to contain a lot of liquidity. That is going to be a really easy target, either during the weekend or slightly after when volume is a lot lower. So I want to be looking at that. We are going to be looking at two types of positions today. First of all, we're going to be looking at shorts. The shorts are mostly going to be based on either this total chart right here, where this ABCD is going to form the base of our shorts, where we have this idea that, hey, we have an ABCD here. If that is stepped and we react to it, that is where we're going to be taking positions because it's a very significant resistance level. And the second type of position on those shorts, it's just going to be based on this liquidity graph. This is likely only going to be on BTC because this is based entirely on BTC, but there could be some alto there that could easily sync with it. The target for those shorts is likely just going to be the bottom of this like kind of grind up. When you have a grind like this, it is just very easy to take this as a target. Okay, explain the when volume is a lot lower comment and how to look out for it coming. Okay, you know what? I'll just use an example. I usually kind of save these for my class, but I don't even give the class anymore, so it doesn't really matter. So I will use the actual example I use in my classes to explain this and to explain the news. Now, I will give where was this? Was it this one? It was right there. Okay. I will give a little disclaimer. I don't know the exact dates anymore, so these could be off by a couple of candles. Okay. Now, and two events happened during this time. The second one was Tether FUD. I'm not going to talk about the Tether FUD that happened during this time. I'm going to be talking about the war news because it serves better for education. Okay. So, one of the things that I mentioned earlier was that news events are very likely to reverse during low volume events and during easily manipulatable events. I have made an entire class on this previously in Unity where I explained the concept of the efficient market hypothesis. I'm just going to quickly mark it out here and quickly summarize it. I will not go into too much detail. In general, when news comes out, there are 3 boxes that you can tick, and if all 3 of those boxes are ticked, the news event is very, very likely to go in the opposite direction of what it implies. If a news event is inarguably good or bad. So, for example, one of the things that you can see slightly further up the chart, or one of the things that, for example, you can see very well on ETH, let's go to a random ETH chart, is the Ethereum ETF. When we look at this part of the chart, we can very easily see where news about the Ethereum ETF came out. You can only see it in the charts, right? Obviously, since we've traded, we know the context. But something like an ETF used to be inarguably good. When you would ask someone about a reason to buy Ethereum, they would always say, hey, an ETF is coming up. Events like that are inarguably good or bad. For example, a bad event would be like a delisting or something like that. Or token emissions. Something like that is going to be inarguably bad. That is checkmark number 1. Checkmark number 2 is it has to have a set date. So a set date can, for example, be a day of elections or a day of, for example, token burns. When Bonk did a token burn a while ago, they would announce the actual date that they would start burning tokens. Something like that. Something where people know this is the moment it's going to happen. And rule number 3 is everyone has to know about it. Let me just... Everyone has to know about it. Everyone here requires a bit of context. Obviously, when you're talking about, for example, something like Bonk, it is not actually everyone. When you're talking about Ethereum, it is not actually everyone. Just everyone, like, for example, with Ethereum, anyone in the crypto space. Like, it has to be very popular news, and anyone that would be in the target demographic knows about it. The idea behind the efficient market hypothesis, and once again, I am very much oversimplifying. This is a very long and complicated concept. The summary about it is, if all 3 of these boxes are ticked, news will go in the opposite direction. So if news is inarguably good for an asset, so you would expect it to go up, and it has a set date, so everyone would know when it has to go up, and everyone knows about it, then likely on the date the news event actually takes place, it will actually go down. There's a lot of reasons for it, which I will not go into right now, but if all 3 of these boxes are ticked, news is very likely to go into the opposite direction people expect. Now, that brings me to the question. Also, hello, Birch. That brings me to the question. Why do you have to look at when volume is a lot lower? When we look at news events, in general, when we look at news events, a lot of news that very heavily impacts the market, once you start looking at it, usually comes out during market closing times. Usually, the initial news drop doesn't, but the event that is actually going to happen does. So, for example, what do we have right here? Sunday at 10 p.m. So this is essentially right before the market is about to open, right? The market will open in a few hours after this. During this time, we got some news about a war breaking out. I don't remember where or what it was because I don't do politics, but a war was about to break out. And what you can see when inarguably bad news comes out, you will also see an initial drop. This makes a lot of sense, right? Because if you hear the news and you're like, hey, that is very bad for my assets, you're going to sell. We see a little rebound from support, and then we see something very interesting. After this rebound, a narrative started going around social media, Discord, whatever. And that narrative was, this was a one-sided strike. This was one nation attacking another. There will be a retaliation. That was the common kind of narrative over here. After this little rebound, people started saying, hey, a retaliation is going to happen. I'm going to think one step ahead and I'm going to sell before that retaliation happens. Because obviously, when you think about it, a war breaking out isn't actually that bad for an asset unless it is directly correlated to it. Something like Bitcoin isn't necessarily impacted by a random war or by a random war somewhere. However, what it usually does is people are going to start trying to be smart and start thinking ahead. So what people started doing here is saying, okay, a retaliation is going to happen. I'm going to sell my asset before that happens because a retaliation is bad. That is the second kind of impulse we see here. That is the second move down we see. Now, obviously, we have the power of hindsight. So I can very easily put this second line here. And what was it? It was this one. This was the one with Terrafod. I can very easily put my little line here. Or, yeah, it was right here. And what do we see right before the market is about to close? Keep in mind, this is Friday at like 10 p.m. What do we see right before the market is about to close? Or it's actually like one candle earlier, right? Or this is one. What we see is a bunch of red candles. This was the actual retaliation happening. And what we can see when the retaliation happened, once again, we see impulse selling. Now, as you may notice, it is way smaller than we see over here. And after that, not much happens. Two reasons why. First of all, it is weekend. When those things happen, when a retaliation happens around market close, no matter what, the narrative will always go around institutions cannot sell currently because they are closed, because it is weekend. Volume is low, institutions cannot sell. This is not true for BTC at all. Very big players can still easily sell because it's all on chain. Markets aren't actually closed, right? And second of all, usually they've got nothing to do with this. Now, we can look at these two lines in sense of the news, but as you may notice, it doesn't make any sense. Because why, when the actual news event happens, does price go up after? We see a little consolidation over the weekend, but when the market actually opens and these said constitutions can start selling, the market actually goes up. So why is that? Let's look at it in a much simpler manner. People hear of news of the war, so they sell. Now, when this happens, does a one-sided attack or does war breaking out actually impact the worth of BTC? It does not. Bitcoin as an asset is not impacted by a random war breaking out. There are exceptions to this rule, obviously. We all know that with the Strait of Hormuz being closed, skyrocketing oil. That makes sense. You can still use this for it, but it is a lot more difficult. This is a very simple example. The war doesn't impact the actual value of BTC. The war is something that it doesn't matter. Long story short, people think it matters, and that is why it technically does, because you do see a significant drop. It doesn't matter to the value, it just matters to the price. Now, what it did do is it put a lot of people that are very interested in owning Bitcoin, because apparently they did own it, so these people have to be interested in owning Bitcoin, out to the sidelines. These people that care about it have sold BTC with the thought, I will buy it back when the retaliation happens. There's going to be a retaliation. I'm going to sell it now. I'm going to buy it back when the retaliation happens. These people are now sidelined. Now, usually with these types of events, you will see some consolidation. This obviously took a long while. You never know how long something is going to take. We see some consolidation. We see some upwards movement. And eventually, this attack happens. Now, when the retaliation actually happens, let's think about those same people. Those same people are now still outside of the market. They're all sitting in USDT, right? And they're thinking to themselves, okay, the retaliation happens. The market is going down. I'm going to wait for the market to go down and I'm going to buy back in. Because these people are still interested in BTC. They only sold because of the war. They didn't sell because of the asset. The retaliation has happened. Markets are back open. And what do we see? We see those same people going back into the market because this is still the same asset they want exposure to. However, now price is slightly higher. This is something that happens a lot. It is the idea of if people all sell for one reason, then when that actual reason happens, like the kind of points that stand over here, the opposite is going to happen. This is very easy to manipulate during low volume events, during something like a weekend, because institutions, quote unquote, cannot trade. Institutions will trade a lot less, but very big players will still trade. And market makers will still trade, and lending services will still trade. So usually, when important news like that happens very close to the weekends, it is literally just to manipulate the market, to make sure that this is mostly people selling, and that this after that is mostly institutions buying. We see people selling after the news. We can see that the news drops somewhere over here. We see people selling after the news. Then we see people buying back in once the institutions are buying back in. This is a very common thing to happen during low volume events. Most common one is obviously the weekend. When I mention that I think the current news, like for example, a bill passing or not passing during like a Friday right before the market open is very calculated. This is what I mean. Usually when you have those types of events, it is very easy to be tricked by the news. Long story short, either what we usually do is we try to like trade against it by looking at this and looking at, okay, can I actually like look at what people are doing instead of trying to think ahead of the market? Always look at what people are trying to think. Or can I simply just look at a chart? Because you can also always just say, hey, this was a very nice kind of sweep and reclaim. I'm just going to take along on that. I'm going to take along on any of these candles. Something like that. The chart will always tell you what you need to know. Now, this way of looking at news is, what's it called? It takes some time getting used to, and it is a bit more obviously difficult because I summarized it a bit. I wanted to go over it fast. But this is a very easy and new way to look at news. This is something that helps a lot during active news events. Now, with that said, obviously this is a lot smaller. It is a bill passing. It is not a war breaking out. With that said, let's look at price action. What do we actually see? Not considering any news. I see a very long liquidity wick right over here, right? We can take this as a support or as a resistance level right here. I'm just gonna draw it right over here to make it a bit more clear. We can see a very long liquidity wick right over there. This can act as resistance. Now we tap that resistance, and after that we instantly tap into support. We have two levels very, very close to each other. All we have done, price action wise, is tapped into this resistance, or well, broke out of this resistance first, tapped into the new one, and we have now come back down to the previous one. All we have currently done is gotten a retest of the support, followed by a liquidity sweep. That is why I'm, for example, saying like, hey, this low volume stuff, it could easily take out some more people that are trying to that took longs before this. But in general, a lot of people that were looking at this news like, hey, the bill got rejected or whatever, I'm gonna take a short because the market is gonna go down. They took shorts on the impulse, but what did we see on the actual charts? From the point that news came out, we have only left behind a bunch of highs. So a lot of people are probably in a short similar to this with targets wherever they have it. Short similar to this with their stop losses anywhere over here. The news we had has created a lot of shorts, and we can just use simple technical analysis to see where those stops are. The stops are somewhere over here. So when the low volume event is over, where the markets don't move that much, maybe we get another impulse down. As we saw with the retaliation earlier, maybe we do get an impulse down. Maybe you do get some kind of action news for Trump being in China or whatever it is. Could absolutely be possible. However, unless we actually lose this low, and unless we actually close below this, in my opinion, will be our main target. Because all the news has done is create a very easy point for everyone to put their stop losses and to all put their liquidity together. It is very profitable for market makers to just send it up here and just take the liquidity. This is something that happens a lot because it is what people will initially think. Because news is something that people usually don't dare to go against. So news is a very easy way to manipulate the market, especially during low volume events. Especially this close to the weekend. Fun fact, that is also why last cycle I started scheduling the streams on Friday, because we literally had this every other week. So we would just take the same kind of news trades every other week based on this. Okay. That is mostly the way I look at BTC right now, and I didn't want to go so in depth, but it's like, it is very useful because this way of trading is going to happen a lot. We're going to have a lot of news events, and news events are one of the easiest things to trade if you know how to. Obviously, we don't know what is going to happen. It doesn't have 100% win rate, but it is just very likely. My invalidation for this thesis, because you always need to have an invalidation, is going to be if we close a 4-hour candle below this line. If we close a 4-hour candle below this, I think the theory is off. If that happens, I was wrong and we go a lot lower. Until that happens, I'm going to assume that we go for these highs. I'm gonna assume that we at least take those and either react to those and then drop, or we just use it to go up higher. This will be the short I'm looking at, and longs that I'm gonna be looking at are all gonna be somewhere down here. Are all gonna be close to this wick or like close to these wicks on whatever chart we have. The long beats him low and it landed. Ooh, that was a lot, brother. See, what's it called? I think I would really recommend. Wait, can I actually just pull that video up? Yeah, I can. I think I would really recommend, because I see you talking about leverage, and leverage is something that a lot of people misunderstand. Something I really, really recommend is to look at your risk management plan and make a full plan. But before that, know how risk to reward works. You should never have 95% of your account on anything. In general, you should always know the exact amount of money you're gonna lose if you lose a trade. No matter what happens, if, for example, I would put a long right here, and this stop loss would hit, I know that I am going to be losing exactly 1.5% of my leverage account. There is no difference to it. Every single leverage trade I lose is going to be 1.5% of my leverage account, unless I say 0.5, or in which case it's going to be half. You need to know exactly what you're risking before you put on a trade. How you do that is up to you. What I recommend is a risk-reward system, because it is a very easy way of managing risk. So I'm just gonna find that video real quick. I think it is this one. If you go on me, the lower low. Origin is gonna be fees to the lot. Important part about looking at your own recordings is always like crazy. Okay. Okay. Yeah, mostly this should be about the timestamp. I highly recommend taking a look at this video. I think it will help you a lot with risk management, especially because you're risking a lot, and using a proper system for it is gonna help a lot. No, they show up in the house side is because of market exchange. Yeah, it is. It's because the general market volume is a lot lower, and I had a lot less time recently, so my plays have also just been more awkward. We've been on a good streak, don't get me wrong, because I don't think we've had a losses this month, which is also why we've been on full size again. Usually when I take a trade half size, it's either because I'm not very much confident in my look on the market, or because the trade is risky, or because we're trading a shitcoin. For example, the ENS spot position is half size because ENS is not that big of a coin, so it's more prone to manipulation. Okay, are there any questions so far? If not, I am down to look at some coin requests. Otherwise, I'm gonna take a look at some questions. When exactly would you take your long or short in this scenario? Yeah, I can just finish a BTC chart. The short is going to be a bit more complicated. The short is going to be mostly focused on this ABCD right here. This is mostly the play I'm looking at. So this would be taking the high over here by going into that ABCD and just having like a 4-hour close that kind of goes into the ABCD, preferably all the way to the top of this box, but then closes below it. So I want a 4-hour count to go above, close below. That is when I take this short. This is the most likely short in my opinion. So like that. Finally learned a Guardian, many things it took me months. Hey, that is good to see you learning. That's really good. Just keep up the work and you'll get there. It is what's it called? I really like Harmonic for a system. Oh, Uniraj, yeah. Yeah, I remember. Yeah, I did. I've got risk management of Bloven messed up and I didn't catch it fast. Oh yeah. I am getting more and more like kind of annoyed with Blowfin, so there's a very good chance I'm going to be moving exchanges as well. Because I've been trying BitUnix a bit, and BitUnix feels a lot better. So there's a good chance I'm going to be moving away from Blowfin. Because I have my like non-KYC account there. I'll have a look at XLM. Blowcoin just still has liquidity issues, and they've had that when they started up the exchange, was completely fine, but they still have it. So price on Blowcoin are usually a bit different, and they also just don't give you anything. It's like Blowcoin's fees are really high, they have liquidity issues, and it just kind of messes up your trades. It's also just not possible to really scalp on Blowfin because the what's it called? Because the fees are so long. XRP and XLM is kind of the same thing. So I'll have a look at them and I'm gonna look at them after each other. Okay. Any other coin requests? If you have any tickets you want me to look at, put them in chat. I'm gonna put Aave on there because I know it's interesting. So that is mine. Likely BitUnix. But I'm not sure yet. This one. That is likely the one I'm gonna be moving to. But I just message him first because I can probably get a partner account from him. What are the confirmations that you usually use for harmonics? I've been in a group for quite a while now, and a lot of time I feel like my targets are completely different from some analysts. Okay, so first of all, one thing you need to keep in mind with harmonics. No, they don't KYC. I haven't KYC'd on there. If you want rewards, you need a KYC, otherwise you don't. So I just haven't KYC'd. Okay, first of all, what you need to keep in mind with harmonics is that harmonics don't tell you where price is going to go. So for example, if I draw this shark on here, which is actually a really nice example because it's so unrealistic. Harmonics do not tell you when you have a harmonic like this that price is gonna go over here. Doesn't exist. The reason harmonics work are because of a lot of fibs that align in the exact same spot. Harmonics will give you a very strong support or resistance around the D point. If I would draw this thing out entirely, you would notice that there are gonna be, should be this one? Yeah. You'll notice that there are gonna be a lot of positions, for example, around this 886 right over here, that have a bunch of fibs together. This one has 2 fibs and a trend-based fib. You have like 2 fibs over here, 2 fibs over here, etc. A lot of the very good harmonics, all they do is they put a bunch of levels together in this spot. So when we draw it out, we can see, okay, if price reaches that spot, we can see 3 fibs very close together. That is going to be a very likely area to react. Harmonics do not tell you that price is going to go there. It just tells us this is the level that is probably going to hold. So when you're talking about targets with harmonics, keep in mind that harmonics are not targets. Harmonics are places to take a trade. They are not your targets. The actual targets for harmonics are always going to be these fibs, are always going to be, let's say this would hit. Let's just imagine it for a second. Your actual targets, if you take a fib from the C to the D point, are always going to be 0.382 and 0.618. I personally just use these as CPs, but for example, with a play like this is not that likely to happen price is much more likely to just kind of chop around and do whatever fish. You'll be able to get multiple positions out of it if you don't stick to these targets. These are your technical targets. You don't have to stick to them. And you will often get higher targets. It is up to you to look at these targets, look at the market conditions, and say, is this realistic? Is this something that can happen, or am I looking at it from too high of a time frame? That is also why you need to consider, are you going to do spot? Are you going to do leverage? If this would happen, for example, I would take this trade, most likely. I would take a spot position here. Why would I take spot? Because I think, looking at market structure, seeing this high followed by a higher low, followed by a higher high, which would in turn be a higher low, I would say, okay, I think this coin is going to be able to put in those targets, but it is going to take a while. There is no way we're going to go from like 80 cents to $2.50 in a week. It's not going to happen. So for this, I would say these targets are realistic, but it's going to take a long time. I'm going to do spot. Which would mean you would be fine with sitting through all of this, which is literally 2 years of accumulation. You need to keep in mind that when you take trades on this time frame, that is possible. If you would take this as a leverage trade, I would say this is just not a realistic target, because what you're essentially saying is, okay, price cannot go below this. And I'm gonna have so much funding fees. So when we get there, I'm gonna have like at least 1 hour just chopped out of it in funding fees. Are these targets realistic? Yes. Are they the proper targets you should use for leverage? Absolutely not. You need to consider the kind of situation that a coin is in and the kind of market state when you look at these targets. If you want to talk about different confluences or different types of confirmation, there are a few very easy tools you can use. First one is obviously the one you're going to get with harmonics for targets is a fib. This is the one I always use, right? And you'll often see me use the 214 as an optional TP. I usually take this one manually. But this is the first one I always use for targets. Second one that is very, very easy is just taking a volume profile and putting it on the range you're going to retrace into. So for example, over here, we can see that we had this little range over here. Oh, it's a crypto chart. That sucks. I don't want to remove this. So putting it on the range over here, let's say we would be in this short right now. Putting it on the range over here, which we are getting back into, makes a lot of sense, because this is the area we're kind of aiming for, right? We know that this area doesn't have much volume, so we can put a TP there, but, well, we can put 1 TP there and that's about it. If we want more, we can look at how much the previous range was traded. Where did people actively trade? People traded a lot in this position, which is around a value area high, and where we can see a lot of volume spikes, and people traded a lot, obviously, in this area. This area has a ton of support. We can see so much volume over here, but for example, over here, there's a little gap. This area is actually just one straight block, essentially. This is your support. It is essentially the end goal. When you get there, the chance that we're actually going to go through it is next to none. At least not in one try. So this would just be my final target, because there's just so much volume in the same spot. And because we have kind of this gap over here where this area has like no volume whatsoever, and then over here we can see it's spiking a lot, I would likely put my next TP somewhere in this area. And I say somewhere in this area because now we would look at, for example, wicks. Do I see a lot of wicks in the same spot? Or do I see, for example, a very big order block or anything like that? I see a lot of wicks and closes kind of focused around this area, with the closes over here, kind of these wicks slightly lower, these wicks very slightly lower, the closes below this area. So I'm gonna just put it over here. I'm gonna put it slightly above the value area high, because the volume is still spiking up there. So that is gonna be a TP. The first TP was what's it called? The first TP was, let's base it on display. First speed would be over here. This is obviously a terrible play, right? We're putting it right there. First speed is like 1R or like a 0.7R. TP1 over there. TP2 is actually very close to that 618, so I would put it over here, but because the 618 is right over there, I'm going to put it slightly higher over there. And our final TP is just going to be that point of control, because we can see that this fixed range volume profile is showing us a ton of volume in this area, so that would be our final target. This is usually how I get my TPs. This is one of the easier ways. There are obviously ways to get it more exact. Sometimes I use fans for it, sometimes I use these little guys for it. But you'll usually notice that these are going to be about the same levels anyway. For example, this anchored VWAP, it's just going to align with the 618, more or less. Usually, if you have one way to get good levels, other ways will kind of agree with it. You will get levels very similar to each other. Hey, what's up, Anna? A very bad lawyer, so I cannot KYC. Yeah, that sucks. Yeah, dexes are usually good for that. I think BitUnix doesn't require KYC. It's been a while since I logged in. Otherwise, I should just use dexes. Like for example, like Hyperliquid or something like that. I've never used Hyperliquid. I don't know if it's good, but like dexes I can come up with are like Hyperliquid and Lighter and whatever. Yeah, that is usually the way I get my TPs. And this was obviously not an actual play. Okay, let's have a look at the coin requests. Let's start with XLM. I am gonna go over this rather quickly because I don't wanna what's it called? I don't wanna drag it out for too long. So I'm gonna go over these coin requests and then we will call it. Before that, did I miss any requests, or is there anyone that wants to put in extras? Let's see, Soul Hype, XRP. Yeah, we got those. Okay. Okay, let's start with XLM and XRP. These coins are very, very similar because XLM and XRP are obviously like very related to each other. By building those entry points based on only harmonics, so that you enter trades when you have multiple other confirmations as well. Okay, I'm gonna give you two answers. The first one is very simple. When we have a market that is very strongly directed into one direction, I will only use harmonics. I would just say, hey, there's a harmonic here, that is enough. So for example, during the times where Dino coins started just absolutely ripping out of nowhere, I would just say, okay, there's a bearish harmonic here, we flipped it to support, I would just enter. When you have a market that is very clearly into one direction, I will do that. When we have a market like we have currently, I will never enter just on a harmonic. It has to be more than that. So, for example, do we have a good example here? Oh, let's actually look at Hype real quick. We'll remove this chart. We've had literally the same chart since like over here. That's been more than a year. Okay, whatever, I'll remove it. Okay, for example, let's look at Hype. I think Hype is a very good example right now. I will sometimes get my trade ideas based on a harmonic because I see a very clear harmonic on the chart, which on Hype is there, but it's slightly higher, right? We have a very obvious W shape right here. This will give me a trade idea, but it's like out there. That is one way I get my trades. The other way I get my trades is by seeing something like this. We have a high forming. We know from our earlier charts that the market is prone to lower. There are reasons to say that we can go lower. So we have this high forming, and what do we see? We see a daily candle that takes that high and is looking to have a very bearish close. We have a long wick followed by what is likely to be a very small body close way below the previous wick, and maybe even below like the wick of the previous candle. This is also enough for me to start looking at a coin. When you see something like this, it is not enough to take a trade, but a liquidity sweep like this is a good reason to start looking at a coin. So now, knowing that, I'm going to look at this coin and I'm going to try and see, can I get a short idea? Are there reasons for me to take this short? Looking at this, I will not get a simple trade out of this. I am not going to go into informal harmonics that much. I do want to have a... Okay, I guess there is one. I'm not going to explain how this one works. I'm just going to put a line here and you'll have to deal with it. This 113 is going to be one important level. Usually I would explain everything, but I've gone a lot into just theories and stuff, so I want to keep it a bit simple for the rest of the stream. Well, I have similar market niche for a long time, so it should be fine. Okay, so long story short, this little box right here, we can see the pips are very, very close to each other. This is a sign that we have a pretty good resistance over here. That is going to be reason number 2. We had the sweep to start looking at this coin. This sweep gave us an interest in this coin. And now that harmonic is giving us a second reason. I wanted to have a look at this because I saw kind of an anti-butterfly over here. I'm actually only getting anti-patterns from hype, which is very ironic. I am gonna mark it out. I know the X to B point is sketchy at best. But I'm using it as an example anyway, and we have different reasons. So, as you can also see, by the way, for those paying a lot of attention, what I mentioned earlier with fibs giving you these dense clusters, as I said, X to B is a bit sketchy on this one. You'll notice that the fibs in this area are not actually clustered. They're very far apart. So I'm going to remove these again because this will not work. So we have, what's it called? We have one harmonic now. We had that sweep on the daily. I'm going to put that little line back. I don't know why I removed it. We have that sweep on the daily. Do we have any other reasons? Other reasons can, for example, include a bearish structure shift. So, for example, on a lower time frame, we can see kind of a high forming here. When we went back over to that area, we closed below it. 3 reasons to look at this. That is enough for me to take a trade. Now, because of the low time frame and because of personal preference, I will always take this trade manually. I don't put limit orders for low time frame trades. I would likely take this trade somewhere over here. The only exception would be if we actually close the daily very bearishly. So, for example, if the daily closes somewhere close to this body, I would take it just on the daily close. So, to answer your question, I either have a lot of confluences, which we would have for this short. We have a lot of reason to think that this short would go well. We have a harmonic. We have a low time frame structure shift. We have that sweep that we talked about on the daily if the daily actually closes below the red line. A lot of reason for it. So I would take this short if we get a good reaction. The only reason why I'm doing reaction plays is because that is my preference. You can limit order this. It is just not something I like to do. That is reason number 1. I would take a trade, or the way I would take a trade. Lots of confluences. The second way I would take a trade is by just... Or actually, let me screenshot this first before I remove it. The second reason I would take a trade, I can remove everything up to this line, is just 2 very good confluences. And that usually includes liquidity sweep. I rarely do that without sweeps. So we know that this is a structure high. We can see a bearish harmonic here, which would be the reason we rejected there. And if this daily now closes below the red line, but especially below this wick as well, this is going to be a very bearish candle close. The last kind of confluence I very often use are just individual candles. Candlesticks are very useful. They will tell you a lot. If you know how to read candlesticks, you will get a lot of plays just with that. For example, this close is very, very bearish. This candle indicates a short. There are entire books about it. I do recommend reading up on it because it's very interesting. Candles like these will very simply tell you you should take a short. Um, Very interesting. What's it called? So if this candle would close below this wick, that would be a very bearish candle, and I would likely just take short based on that. That would be a harmonic, a liquidity sweep, and a very bearish close. So this would be a very nice short, taking it down to at least that 3 point. Likely actually a bit lower. So either a lot of confluences or a harmonic alongside a liquidity sweep, something like that. In market conditions like these, I never take it based on just one confluence because it's simply not enough. It is enough in very good bull markets for very good bear markets. It is not enough in choppy markets. The biggest reason why people lose a lot of money when markets are chopping is because they're simply not picky enough. No one is forcing you to take a single trade. There is no reason to take a trade if you are not 100% confident that it's going to work. And people tend to have very good memories of the bull markets. So they're like, okay, what did I do in that market to make me a lot of money? I just took every trade I saw. And I saw this harmonic and it worked, so I'm going to do that again. It doesn't work that way in all market conditions. In these market conditions, you need to be very, very picky with your positions. So that is also why my trades have gone down a lot. During the bull market, I averaged, I think, around like 35 trades a month, and now we're down to like a bit less than 10 usually. It's because you have to be a lot more picky in choppy conditions. That being that picky is the only reason we haven't lost anything, or lost significant amounts. That's also why we haven't had a loss this month yet. It was just very, very picky. Yeah, the answer to your question was a bit more complicated than expected, probably, but it is a complicated question that a lot of people get wrong. It really, really depends on the market conditions. But yeah, that is hype done as well. That is mostly what I'm looking for in hype. I think hype's very good for shorts. I also know the hype is a bit strong, so taking a short feels really weird. But a candle close like this, if it closed below the red line, is just incredibly bearish. I've started the more I started trading in more complicated trading systems, because I went very deep into Fibs and GAN and time-based things and that kind of stuff, the more I actually started appreciating the very simple ways of technical analysis. For example, just reading candlesticks. It works. No one does it, and that's why it works. No one reads candlesticks anymore. So just taking a trade based upon a very bad candlestick is likely gonna work. This candle close is very, very bearish. This is a very easy short. Same with this candle, kind of, but it's like so long you can't really take action on it. Candlesticks are very good to read. If you want, what's it called? If you want to get better fundamentally at trading, I recommend looking into candlesticks. Okay, that was hype done. Let's look at XLM. XLM is always a bit interesting. First of all, I recommend never trading these two at the same time. There's always one better, and they are the same asset, more or less. So don't trade them at the same time. Just pick the one that fits your trading style better or that looks best. XLM has a very big ABCD. Let's see how far down it goes, all the way into the negatives. Okay, let's not use that. Yeah, but as you may have noticed if you started trading harmonics a lot, is that usually when you get your best setups with harmonics, the coins are going to be really strong. A very big part of the books by Scott Carney about harmonics actually just tell you that most of it is just learning how to deal with the mental aspect of harmonics, because they're a very taxing way to trade. Because you're gonna get really, really early entries, but it also means that like your body doesn't want to take the trade. You really don't want to because it looks strong always. Like this candle close on BTC on the 4 hour. Yes, for example, but I would mostly look at the candle 2 to the left. Like the green one that has a very slim body but a very high wick that retests an important area. That is a textbook bearish close. So like the one you pointed at, the red one, that red one and the green one are the exact same thing. Both of those indicate very bearish price action. Both of those would give you ideas to take a short. Okay, excellent. When looking at this on a higher time frame, the complete macro view doesn't give us that much. This only gives us an anti-shark. The anti-shark ends at the 113, which we're reacting off of currently. So for that reason, I'm just going to zoom in. Because all we're going to get are just very simple levels, which are mostly going to align with this. So I'm just going to pull a fib like this when I'm going to zoom in. Happen to be busy when I need, sure, yeah. Always happens. Yeah, that's a very nice garden. Bearish divergences don't actually count when they're not close to the overbought, oversold area. Harmonics go very, very well with divergences, but when they're that close to the center, they don't mean that much. So I wouldn't take the RSI into account, but that is very nice deep guarding. Yeah, that's a very nice deep guarding. The reason I didn't mark it out is because I prefer taking these high time frame points. But it is a very nice one. It's a very good spot. Okay, zoomed in on XLM. I'm going to start looking at the most obvious MNW shapes first. So we have a very obvious range low. Simply the highest point after that. And then this B point. When you have an XAB that is very close to the 786, we likely have a butterfly. The problem with butterflies is that they have a tolerance of 3% instead of 5%, so this is very, very slightly out of tolerance. However, since you know that I like to manually calculate my fibs instead of taking tolerance levels, we're just going to do that instead. And I'm just going to mark out all of the fibs and see if the boxes align well. And would you have it, the boxes align really well. So this one will very likely work out. Let's see, that is actually the 886 from a higher time frame. This also works out very nicely because of the 886. We can see that we have a very nice level here, and the 886 is right on top of it. It's really good. Honestly, because of that, and because when we look at this wick is also there. This is simply the level I would look at. I don't think there's much reason to look at anything else. That's perfect. We have a very nice harmonic. We have a very high time frame fib right there, very high time frame 886. And we have some liquidity right there. If this taps and it reacts, I think this is a very good play. You can likely limit order this if you want a better entry, because getting stop losses on plays like these is a lot more challenging than getting the actual entry. Gonna put it right there. This stop loss could easily get wicked out. If you want a better stop loss, you would have to wait for a reaction instead and take it manually. If you can't take it manually, this should be fine. And I would take it at least up to that 786, or at least up to the highs over here, and just make sure you TP that X point. So something like this. I'm only going to mark out TP1 because you don't know where it is going to land, right? You never know where your fibs are going to land. So the technical targets like this, I can put them on the entry because I can say like that is where it's going to wick and then it's going to go up. What you'll see is that the 214 is perfectly on X, it's really nice. I can put it like this, but you never know what's going to happen. So these TPs are very, very like kind of This is just guesswork. These could easily change. So these are just there to give you an idea. I would look at it in a moment. So I like this on XLM. I kind of want to start rounding up the stream, so I'm not going to look at XRP because it's going to be the exact same thing. It's going to be the same ticker anyway. I can kind of draw it up quickly, but you're going to get levels very similar to each other. So, for example, consider XLM, yeah. I would honestly literally just trade XLM. Much better. This chart looks really, really good. This is a position I'm gonna likely take myself. If you get there, you will see this position as a call. XRP, very similar. I would just wait and trade XLM for now. Let's look at Sol. Sol actually had a very clean play that I missed. There's just very clean liquidity sweep and a very bearish candle. If I saw this, we would have absolutely taken this. It's very bearish close, and we would have absolutely taken this short. Looking at Sol now, though, Sol is actually a lot more difficult. On a very high time frame, I think you have a lot of reasons to be bearish and bullish on Sol. We can kind of just take this order block and say that is our support right now. Yeah, that Sol short was really, really good. I would have loved to take it, but I saw it during like kind of discount because I've been busy past few days. I was like, yeah, well, that is just simply too late. Because your short on the SFP is actually just this, right? It's a very textbook SFP. A very easy short to take. And it would have been a ton of R. Either way, we have some very high time frame support, and the problem I have with Sol is that this sweep, even though we're not in a short, this is a very clear SFP and just taking the range. So I think these highs are the target. Usually I would try to get some harmonics in to try and see, hey, do we actually maybe have something before that? Not really. We can make one on a very low time frame over here, and what we'll get is a bad right over here. But you cannot really place your stop loss here because you have so many wicks over in this area, and we're kind of using this X point in the middle. This would be a play that you can take a scalp on. This is not a play I would drag into a higher time frame. So maybe this, in general, I think the biggest prio. Yeah, you can take a Leo, but you can take Leos on it. Long story short, I think the Leo here would be fine, but you can see that D point being very close to the 2.618. This is going to be a much stronger level. If you mark this out to the Leo, what you'll see is that it's just going to be, in this case, a 224. The 2.618 is just a much stronger level. The Leo's valid here, for sure. It is a good play. I just highly prefer the 2.618. Yeah, 2.618 is a lot stronger of a level than 224. Okay, so either way, you can take this play, but I think it is a lot more risky. I wouldn't necessarily advise it, but it's valid. I will mark a play like this outright, and if we see the market reacting properly, we might take it. I think the most interesting position on Sol is actually lower, and it's just going to be on a sweep of these. I think this is a very interesting position because the only actual sweep of these we have is a very big handle on the left. Well, I didn't really sweep it, right? But that has been the last like kind of good sweep on Sol. After that, it's just been vertical accumulation. So I think this is a very interesting level on Sol. In general, though, you can absolutely take the kind of play that I marked out in screenshot in chat. It is absolutely valid. Just gonna require a bit more execution. So the chance I will call that one is a lot smaller. The chance I will call a Sol position if we ever break these red lines is very, very high. We already did hype. The last one was Aave because I really wanted to look at Aave. The reason why I wanted to mention Aave is because Aave is at a very interesting position. Eve, let me have a quick look at Eve. Yeah, Eve looks good. Macro-wise, this is the level you want to look at on Eve. If we get a good retest in here, if we wick into this gold box and we close above it, this is literally the best high time frame level to take a trade on. Because this is still your range, right? We've been drawing the same range for the past like literally 1.5 years. This is still your range, with mid-range being right here. So a trade would like to go up to. On a high time frame Eve, I wouldn't complicate it more than this. You would have to go onto a low time frame to actually get proper plays, but Eve is a token I like to use for ideas mostly and not actually to trade. You can get good trades in on this though. For example, the sweep actually. It is a very risky play, but this wouldn't necessarily be bad. I'm not going to go into that for too much though. Eve is just a coin I wouldn't complicate too much. I would just look at it like this and either get into spot or use it as confluence for other trades. Okay, let's see. Let's have a look at Aave. The reason why I wanted to look at Aave is because Aave is at a very, very interesting high time frame level. And as you may know from last cycle, Aave is my most traded coin by far. So it is also just a coin that I really like. Aave is very close to that 886 right now. And we have some very, like, kind of very tight accumulation over here that we broke out of. Usually when you have accumulation range like this is just a liquidity grab. This is just a way to kind of take one side of this accumulation. Now, when we have a look at this, that doesn't come close to a butterfly. I'm not gonna get close to that either. In that case, we'll just use this one. There are a bunch of levels that line up somewhere around here. So for that reason, I think if we do get another sweep lower, you're gonna get a very interesting spot on Aave in this area. So this is something we'll very likely be looking at. Alright, I rushed a bit over the last part, because the stream was supposed to end like 20 minutes ago, but we were talking about some very interesting stuff, so it isn't that bad. Okay, are there any questions before I end the stream? We've had a very good stream, but we've also talked a lot about some very interesting topics. If you have any questions, just take your moment to ask them, so I can take some time to answer them. Thank you for no worries. Thanks for the comment, Deepak. Appreciate it. All right. In that case, I want to thank everyone for coming and for being here for the stream. It has been a very good stream, and I'm very glad to see a lot of familiar faces because usually when people actually like take the time to live through multiple cycles, that's when you start seeing proper growth. All right. Thanks everyone for coming, and I'm gonna be there again next week. We're gonna be back next Friday, and we're gonna see how this news actually played out. I think the news event is gonna be very interesting. I think it is very interesting timing that we get news like that right before the weekly close. All right. I will see everyone next week. Have a good evening, lads.